How do I stay centered? Every morning I sit in that leather chair right over there, and I spend about an hour meditating on ancient scripture texts and journaling and really seeking wisdom for the day and for my life and my company.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your wealth and compounding your life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and grow your faith, your wealth, your impact, so you can give more or all of it away. My name is Brett Swartz, and today I will be the host, and each and every episode we interview some of the world's top entrepreneurs, millionaires, and billionaires, where they share their secrets, insights, and wisdom with us so we can all level up for more impact. I'm excited about our next guest. He is out of the state of Virginia. He is the founder of Wellings Capital, and after graduating with an engineering degree and an MBA from Ohio State, he entered the management development track at Ford Motor Company in Detroit. After 5 years, he departed to start a staffing company with a partner. They scaled and sold the company to a publicly traded firm 5 years later. And after brief retirement in his early 30s, he began investing in real estate in 1999 to protect and to grow his wealth. He's completed over 85 real estate investments since and exits, and appeared on HGTV's House Hunters, rehabbed and managed dozens of rental properties, and developed a subdivision. He has completed successful real estate developments, including assisting with the development of Hyatt Hotel and so much more. He's the founder of Wellings Capital. Please welcome to the show with me, Mr. Paul Moore. Paul, how are we doing?
Hey, Brett, it is so great to see you again. How you been?
Doing great. Yeah, you were on the Capital Gains Tax Reasons podcast a couple of years ago when I was still in California, now here in Florida, and now it's the Build It to Billions podcast. Big secret, by the way. We're also streaming for Capital Gains Tax Solutions, and so people can also see it there again as well. But that being said, people want to hear about even Paul's his funds and what he's up to and investments and different things. You can check that out as well. Go to willingscapital.com just to learn more. But today we're talking about the boring investor, So Paul, let's dive right in. Tell us a little bit about your story, and then let's dive into the boring investor, okay?
Well, yeah. So, Brett, I'm a little embarrassed to share the truth here, but when I sold my company in 1997 to a public firm, I actually thought, hey, I'm a full-time investor now. I'll put that on my business card. And the truth is, I wasn't. I was a full-time speculator. I didn't know the difference. And you know what? I think the problem was I was young, ambitious, and I thought I should get the same excitement, the same thrill from investing that I got from being an entrepreneur. I didn't understand that there's a massive difference. And so I made a lot of mistakes. I mean, I basically call myself now, I was an entrepreneurial investor. Entrepreneurial investors, they stay in startup mode for a long time. They get a rush out of the process. They repeat the learning curve over and over and over. They often are speculators, and many of them end up living in a mansion, or others end up retiring working as a greeter at Walmart. And there's nothing wrong with being a greeter at Walmart. We need those. But it's not where most of your listeners want to end up, and I certainly don't. And so it took me a long, long time and a lot of study and a lot of painful mistakes, a lot of lost money. I had a podcast called How to Lose Money for years. And it was a wealth building podcast, don't worry. But I eventually learned that the path to attaining true wealth is usually by being a boring investor. So that's kind of the backstory on that, Brett.
That's fantastic. And by the way, to learn more about Mr. Paul Moore, go to wellingscapital.com. So what is the number one secret then, Paul, to being, if we're saying that boring is a good thing, right? We're assuming that's a good thing, right? It's a great thing, to being a boring investor.
Well, I mean, I think it's realizing what true wealth is. Let's start with that. And, you probably think I'm going to say something about faith here. And of course, I believe that, but I'm talking about in a physical wealth sense. I think true wealth is having assets that produce cash flow. specifically having, Warren Buffett said, if you don't learn to make money while you sleep, you'll have to work until you die. And so basically it's that quadrant, of Kiyosaki's, where the money makes money. Paul Samuelson was the first U.S. economist to win the Nobel Peace Prize. And he talked about boring investing. He said, investing should be like watching paint dry or watching grass grow. If you want excitement, he said, take $800 and go to Las Vegas. And I think the point of that is, again, that a lot of investments, a lot of real true investments are really boring. One of my investors used to be an entrepreneurial investor, and he actually was part of a company that went public, and he was constantly glued to his stock ticker, checking his options prices. It began to eat into his sleep. It began to cut into his relationship times. It consumed his lunch hour, and eventually took a toll on his health, his productivity. And, I think that, boring investors avoid these hidden costs, because my friend Kevin now sails in the Puget Sound of Seattle. He has his money in ETFs. He has his money in commercial real estate deals. He's passive in those deals, and he lets his money make money, and he is avoiding those hidden costs. Jesus said, do not worry about your life, what you'll eat or drink or wear. This is all in Matthew chapter 6 and in Luke 6, and you can read about there. He says, don't worry about all these things. And I think that as passive commercial real estate investors, or investors, if you're in the stock market and ETFs, just let it run. You're going to likely avoid those hidden costs. Charlie Munger, Warren Buffett's partner, God rest his soul, said most stock investors should just invest in ETFs. Why do you think you have a special skill in picking stocks? He said, you don't create your own lawnmower. You don't build your own lawnmower engines or design your own egg beaters, do you? And that was one of Charlie's last interviews before he passed a year and a half ago. And it's really true. And I think it's true for real estate investors as well. A whole lot of doctors, dentists, lawyers, highly paid IT people, they want to do real estate on the side. I talked to one of them recently who said, yeah, I spent my Christmas Eve, instead of at church, I spent it out fixing a water leak at one of my houses. And he's a highly paid doctor. And he's like, what am I doing? And boring investors avoid these hidden costs. Boring investors also lose money.
Pause. This is really good. I want to cut a couple things, right? So
yeah,
they avoid the hidden cost of the stress, of the mind space, of the pulling, eating up the sleep, consuming their lunch hour, right? And in other words, they're not truly passive. They're not Kenny Chesney on the beach, with a guitar, right, no shoes, no shirt, no problem, having consistent, durable income, showing up month after month, sleeping well at night, not having to be concerned about it. Is that a fair summary so far, Mr. Paul Moore?
Yeah, absolutely. That's exactly what I'm talking about. That's
great. What's secret number two?
You do a lot of work to do the due diligence to find the investments, but then you let the investments work for themselves.
Excellent. Is that secret number two? I guess, is that number two? Do the due diligence? Is that?
Oh yeah, that's one of them too. They do deep due diligence up front, but then they trust the operator to do the heavy lifting.
Okay.
Another secret is they lose money and make a fortune. And what I mean by that is, we had the How to Lose Money show. I think you were a guest on there back probably 7 years ago. And here's what I mean by that is we didn't want to teach people to lose money. We want to teach people how to take the mistakes we've made and turn those into future success. Now, this is a crazy thing I didn't know about when I had the show. Warren Buffett and Bill Gates said that Charlie Munger, I'm quoting him again, was the most brilliant investment mind on the planet. They knew him pretty well, and they said he was the most brilliant. What does the most brilliant investor on the planet spend his time doing, Brett? Well, you would think it would be creating really complex algorithms or some really, really intensely hard to understand formula like E equals MC squared of the investing world. But it's not. It's not what he did. Charlie Munger spent his time, his obsession, his 500 books he sat in his armchair and read a year, looking for unearthing mistakes and just saying, okay, what can we do to avoid these repeatable mistakes? What did we do wrong? And what can we learn from our mistakes and other people's mistakes so we don't repeat these? Boring investors realize that up front that they might be wrong. They're not overly confident. I remember standing in a room full of friends, a dozen or more friends in Michigan in the 1990s. I started a new company. I was drafting a bunch of them to be sales reps. I said, this cannot fail. Of course it failed. Boring investors realize we might be wrong. Charlie Munger, again, he stood up in front of the Berkshire Hathaway faithful, 40,000 people, and he said, we were horses' asses. We failed you. He told him he failed, and he said, but here's what we learned from it, and here's what we're going to do right next time. Chris Davis of Davis Advisors, very successful investment firm. They have a wall of shame in their office where they have framed stock certificates with bullet points underneath with all the mistakes they made when they invested in different companies and held on to them. Companies like AIG. And Chris said, our minds are plastic. They should be, they're created to change and be changed. And we realize we don't want to have firm, hardened opinions. We want to realize that, we should change our mind based on mistakes we have made and others have made in the past. Because
let me dive in here, Paul. This is really, really good. Yeah, this is really, really good. So I heard also a story about Charlie Munger. I thought this is pretty awesome, right? He was, my understanding, World War II aircraft carrier, right? He was responsible for making sure these pilots were able to land safely back. And he says he was way, way in over his skis, right? Wasn't trained for it, didn't have it, but all of a sudden he found himself responsible. I mean, trained the best they could, but not overly trained, right? And he's going, I don't even know what to do. So he said all he could think about is this inversion thinking, kind of what you're referring to, which he tried to, flip the problem. He said to himself, what if I wanted to kill every single one of these pilots, right? If I wanted them to not return safely to their loved ones, to blow up the plane, like what would I do if I wanted to try to kill them, right? And he came up with two things. Number one, he put them in situations where their wings would lose altitude quickly and they would crash. Number two, he'd have them fly missions where they'd run out of gas and they just crash because they ran out of gas, right? And he goes, okay, if I know those two things are what I would do if I wanted to try to kill them, let's inverse it one more time and say, now let's make sure we never do those two things. Yeah. And that was his focus, right? A laser. And he said that type of thinking is what helped him to develop his philosophy and his strategic approach to companies, right? And probably exactly what the mistakes you're talking about. And I think you're exactly right. I mean, you got to know where might we be wrong? Where are we wrong? Where were we wrong? And don't ever forget how you completely missed it and have the humility to say I was wrong. But don't also have the wisdom to not repeat the mistakes. Is that what you're saying, Paul?
Yeah, that's what I'm saying. That's exactly right. One way to do that is do a pre-mortem. We've heard of post-mortems, like what went wrong and what did we screw up? But pre-mortem is pretending, going 10 years from now, looking back to today and pretending that you failed. Then saying, okay, let's make a list of all the things we did wrong when we made the decision to cause the failure. Check off that list and then go, which ones of these do we need to address and look at more deeply? It's another way of saying we need to do deep dive due diligence.
Okay, excellent. Okay, so those are the first two or three or so. What is the next secret to being a boring investor?
Oh, there's so many. How about boring investors invest in the gold rush? Sort of. And another way to say that is boring investors invest in boring assets. Well, boring assets could be self-storage, mobile home parks, things that are boring. Sam Zell didn't think they were boring as he assembled 158,000 mobile home park lots and became a billionaire. But what I'm talking about investing in the gold rush, sort of, is this. My wife and I stood on the exact location where about 110,000 people departed into the Yukon and into the to try to get pan for gold in the gold rush in the 1890s in Alaska. Now, a huge percentage of those died or turned back and never made it. But there are certain people, the boring investors, not the ones who invested in the gold rush, but those who invested, as you know, I'm going to say, the picks and shovels, those who invested in the logistics, those who commandeered the dog sleds, those were the ones that those gold rush guys looked down on. What are you doing? Why are you building housing? Why are you doing dog sleds? They're the ones that vacationed on those same mountains where those miners, those would-be miners, bled and died. And I mean, an example of that for us was we invested in the oil rush, in the oil boom, I should say, in North Dakota in 2010, and we lost money doing that. Later, we went back to that same place and we built housing for those oil workers, and we were practically printing money for years, housing those same oil workers. And, it wasn't as exciting as getting a 10 or 20x return on the money we dropped into a 6,000 foot deep hole in the ground, but it was a lot better than coming up empty. Warren Buffett, we all know his first rule is don't lose money. Second rule, see rule number 1.
Let's talk about oil and gas for a second. I still have yet to really do it myself. I have a lot of folks approach me. I've had a couple clients do it. But I'm curious, Paul, what has been your experience? Have you made money in oil and gas? And or do you know anyone who's really deep in the real estate that's made money in oil and gas? I feel like I'm kind of in limbo, and that's part of why I just said no to it for so long. But what is your take on it, Paul?
Well, we all know the tax benefits are stunning. They're wonderful tax benefits. Of course, there's a reason for that. They want people to invest in it. My quick answer goes right along with our call today, with our podcast today, and that is the people who invest on the fringes, on the edges, who do pioneering, wildcatting, they call it in the industry. They're the ones that make 100x returns and become extremely wealthy. The problem is they're the outliers, not the norm. And most of those who are doing that wildcatting come up completely empty like our guy did. Our guy was drilling in the Bakken region where everybody was making a fortune. He was actually drilling in a different depth, though, for a different type of oil that would actually be much more profitable. Of course, it came up empty. My answer is there's a way to do it, which is more boring, and that is infill drilling. And that is taking an oil field. Let's say there's 100 wells in, let's say, a 50-mile radius that are all producing oil at a certain depth. You can punch a hole right in the middle of those, and very, very likely you'll hit oil. It won't be as exciting, but it'll probably be more profitable.
Got it. Okay. Great breakdown of that. I appreciate that. By the way, Mr. Paul Moore, wellingscapital.com. It's wellingscapital.com. So continue on the boring investor here. What's the next secret here, or something else that you want to point out to make sure we're all achieving the boring investor status here?
I'll just touch on this briefly because we've already touched on it, but boring investors diversify. The entrepreneurial investors put all their eggs in one basket and swing for the fences. And of course, Munger said, you've got to make sure your mistakes, because there will be mistakes, are not fatal. And that's a fatal mistake. Boring investors diversify. Warren Buffett said diversification is for people who don't know what they're doing. And that made me really mad as somebody writing a book about Buffett's principles for real estate investors. I said, that's not right. Buffett is the most diversified company in the Fortune 500, for sure. In Fortune 7 company, 108 different businesses and 108 different industries under him. And then I realized he was talking about one company within itself diversifying. So if Dairy Queen said, Well, not only do we want to be the best ice cream, we want to go out and create a paper mill to build the cartons, manufacture the cups and the paper cups and the cones. And let's go back and buy 1 million acres of timberland to get the paper pulp to make the paper. That's dumb diversification. Smart diversification says, look, I know anything can fail, so I'm going to spread out my money. There's a proverb that says, divide your money 6 or 7 ways. Smart investors, boring investors, diversify. They don't chase shiny objects. George Soros, who neither one of us are probably a fan of personally, but he is a great investor, he said, if your investing is entertaining, if you're having fun, you're probably not making any money. Good investing should be boring.
Okay, excellent. All right. So what haven't we shared about the boring investor that you want to make sure we share before you land the plane here, Paul?
Well, boring investors traded FOMO for FOMU. FOMO is what I had when I first started investing, or should I say speculating. FOMO was the fear of missing out. Everything looked good. And let's face it, every website, every brochure, every glossy, shiny thing looks good up front. But boring investors realize FOMO is not, we looked at 745 deals last year and only invested in 5. All 745 looked good. And if I was going on FOMO, I would have tried to invest in all of them so I didn't miss out. But we traded FOMO for FOMU, which is the fear of messing up. And eventually, by trading FOMO for FOMU, we got JOMO. JOMO is the joy of missing out. We missed out on a couple fantastic deals about 4 or 5 years ago. They sold last year. We happened to know about this. And it was a little painful, but we had a joy in it because we knew we stuck to our process. Sticking to your process over time will likely help you, achieve real, true wealth more likely than swinging for the fences and hoping to hit it out of the park 1 or 2 out of every 10 times.
I couldn't agree with you more. And that's why we love the deferred sales trust, because you can sell, diversify, and get out of all of your debt. And what we did a couple of years ago, Paul, we agreed those deals, especially multifamily, were way overpriced, way overbid. And the rates were, low until they're not anymore when the rates adjust, right? And then people are really getting crushed. And so we were going into a lot of real estate debt a few years ago, right? And we were really glad we did. Stuff that's like about 30 to 60, 90-day liquid. We can get out pretty quickly to take advantage of these deals as they come here. And now we're buying a deal right now. It's $68,000 per door. Bought one for $113,000 per door. And then this is stuff that was like nowhere to be found a few years back, right? And now we're buying at a discount. So talk about just the timing of everything, right? So having strategies. I talk about a tax flow, a cash flow, and a debt flow mindset, and having a 3D approach to investing where your exit strategy gives you the leverage over those 3. It doesn't force you like a 1031 into something in a short period of time. It doesn't force you to stay in the debt like a 1031 does, equal or greater value. But also you get the timing to be able to buy or diversify into other investments when it makes sense for you. That's why we still, we focus like a laser on providing that service, and it's been transformational for families. But I'm curious, you've had a few years to think about that strategy or look at it. And when I first talked about it on your show, where do you see it, and what are your thoughts now on that?
Well, it's related to one of the next concepts I wanted to share, and that is boring investors suffer mockery and misunderstanding. Now, Warren Buffett, last I checked, had $330 billion in cash and cash equivalents on his balance sheet. He's being massively criticized by some Berkshire Hathaway investors, as he has been for years. In 1999, Buffett was seriously criticized at 69 years old. They said he was over the hill. He didn't know what he was doing. He had missed the tech boom. 26 years ago, his friends were whispering about him in Sun Valley, Idaho, his billionaire club that meets every summer there. And they said, he missed the tech boom. We're making thousands of percentage of return on investment. He's just plodding along at his normal 12 or 15 or 20% annual return. But he stood up among them the last day of the conference and said, guys, I know what you're saying about me. I would rather invest in Wrigley's chewing gum than technology because I know how people will be chewing gum a decade from now. I don't know where the internet will be. And of course, a year or two later, he was right again when the tech bubble crashed and many of those people lost millions or billions of dollars. Boring investors suffer mockery and misunderstanding. And that's, the closest thing I can say to comment on that. I do have a couple more comments before we land the plane if we have time.
I do, but I'm curious, did Warren ever go back and buy tech after? I mean, of course he did, right? But I'm wondering when did he go back?
Yeah. So when Steve Jobs passed away, around that time, he looked at the Apple stock, and I don't have the exact numbers, Brett, but I think it was trading in the teens, like $13 to $18 a share. And he watched his grandchildren. He has 3 kids and lots of grandkids, and he watched their behavior, absolutely glued to their iPhones, their iPads, their MacBook Pros, etc. And he said, wait a minute, this isn't really tech anymore. Apple is a phenomenon. It's a retail brand. And he saw it more as a retail brand than tech, and that's when the light bulb went off for him. He really believed the analysts had overweighted Steve Jobs. I feel funny saying this, but they had overweighted Steve Jobs' contribution to the future of Apple. He really believed Apple had a much bigger runway than the analysts did. So he started quietly and then loudly buying up Apple stock. Of course, it skyrocketed and it became half of his portfolio, so much so that he had to divest of some because it was overweighted in Berkshire about a year ago, I believe. Here's the amazing thing about why we should listen to Buffett, I think. Did you know, Brett, that if Berkshire Hathaway lost 99% of its value, so if it was $100 a share, for example, if it was down to $1 a share, it would still wallop the S&P 500 over the last 6 decades. So, I mean, I think he's somebody we should listen to. And Buffett has learned some very, very painful lessons, and I want to talk about that if we have a minute left.
Yep, go for it.
All right. Boring investors invest in the unseen realm where there's apparently no return on investment. And I like to ask live audiences. I was with your friends at DLP at the White Coat Investor Conference about 6 weeks ago. And I asked the audience a silly question. I said, anybody heard of George Washington? Of course they had. Anybody here heard of William Wilberforce? Sadly, about 5% of the audience raised their hands. William Wilberforce should be, in my humble opinion, the most influential person of the last 1,000 years on Earth. And you can go look him up yourself if you're listening. But 2007, there was a movie that only captured a sliver of his amazing life. It's called Amazing Grace, the life of William Wilberforce. But William at 21, he was the youngest member ever elected to Parliament. He was a playboy. He was member of 5 country clubs. He had wealth. He had everything he ever wanted. And then he came face to face with the slave trade. And he actually dedicated his life to Jesus Christ. And he actually dedicated his life to getting rid of the slave trade. And it took, I don't know how long, a decade or two of tireless work. He sacrificed his friendships, his health, his wealth, his reputation, and eventually got the slave trade outlawed. And then 3 days before his death, decades later, they actually completely outlawed slavery in the UK, and it eventually spilled over to the Civil War in the US and ended up getting millions of additional slaves free. And I would say Wilberforce, like other boring investors, he invested for a testimony, not a title. And what I mean by that is, the King of England, King George III, had a title. William Wilberforce has a testimony for eternity. Pharaoh had a title. Moses has a testimony. Pilate had a title. Jesus has a testimony. J. Edgar Hoover had a title. Martin Luther King Jr. has a testimony. And so I would ask you as investors, are you investing for a testimony or a title? Are you investing to have just money or an eternal return on investment? Are you investing for yourself or to leave a legacy? And one of the things we love to talk about to our investors is the possibility of leaving a legacy. Although slavery was abolished a couple hundred years ago, there are more enslaved people on earth now than ever before, at about 50 million people. If you took the record profits, speaking of oil and gas, the record profits of ExxonMobil, Nike, and Walmart, and tripled that number, you would arrive at the estimated annual profits of human trafficking. Took their record profits, added them together, tripled that number, $250 billion almost, according to the U.S. State Department. So we've gotten an organization we decided to get behind. We're raising all the money we can, and all the, we're trying to raise awareness of the horrors of human trafficking around the world now.
Paul Moore, incredible. Thank you so much for sharing that story of William Wilberforce, and as well as the fight that you're in. We are way out of time. Are you ready for the lightning round?
Let's do it.
All right. Knowing what you know now, if you can go back to your 20-year-old self, what's the one golden nugget, besides being a boring investor, that you'd tell yourself to do?
I would have skipped decades of entrepreneurial shiny object chasing, which I did a whole lot of, and I would have gone straight into commercial real estate.
Awesome. Perfect. Question number 2, number one book you recommended or gifted the most in the past year?
It would be The One Thing by Gary Keller and Jay Papasan, because it teaches me and teaches others to focus, say no to 1,000 distractions and yes to one thing.
Excellent. Question number 3, number one way you're using ChatGPT?
Oh, I'm using it constantly. Here's one that people might not have thought of. I'm actually using it to compose encouraging texts to my family. I described each family member in great detail. And I said, hey, I need to encourage them today. They're really down about their finances. And it will give me a crafted answer. Now I have to craft it a little more. They're going to know it's from ChatGPT. I hope they're not listening.
Question number 4, number one leadership quote or theme that you strive to live by?
Gary Keller again. He said, if you're going to say yes to your one thing, you have to say no to 1,000 potential distractions along the way.
Excellent. Last question. What's the number one way you practice stewardship over ownership, and how do you stay centered in your values?
As far as stewardship over ownership, I'm actually contributing to some organizations. There are people enslaved around the world, like I mentioned, in human trafficking. And so we're trying to raise awareness for that, and we're trying to raise money. We've helped raise and influence over $840,000 in that arena. How do I stay centered? Every morning I sit in that leather chair right over there, and I spend about an hour meditating on ancient scripture texts and journaling, and really seeking wisdom for the day and for my life and my company.
Paul Moore, it's been more than a pleasure to have you back on the show. It's been way too long to have you here, and I'm so grateful for our time together. You just dropped a ton of wisdom, insight, inspiration, all of the things to how to be a boring investor and how to make an impact with our wealth and with our lives. And so thank you. Thank you. Keep doing what you're doing to help people do the same. And with that being said, for our listeners who do want to get in touch with you, would you remind them one last time, what's the best place for them to find you?
Yeah, I got all kinds of free stuff. You can get it at wellingscapital.com/resources, and that will give you free special reports on mobile home parks, self-storage investing, and commercial real estate investing in general. wellingscapital.com/resources.
Perfect. Awesome. Thank you so much, Mr. Paul Moore. And I also want to thank all of our listeners for listening to another episode of the Build to Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast on YouTube channels as well. And we're here to scale from millions to billions alongside of you, the purpose-driven entrepreneur and investor who wants to make a big impact, wants to live a life of stewardship, and wants to live a life of really scaling and helping and blessing MVPs. So appreciate everyone listening and watching out there. Please rate, review, subscribe. And if you have someone you could share this with, that would be inspiration too as well. Please share with them, and we'll talk to everyone again real soon. Bye now.